Hi to all. Good morning, good afternoon, and good evening. No? Kung ano oras kayo nanonood no, for this one. So, today, what I will discuss is all about capital budgeting. Alam nyo ba, in terms of capital budgeting, it is the most practical in terms of the management advisory services or the management accounting. Why? Because, again, it is more on the capital budgeting. In corporate world, it is called capex. All right, so capex, capital expenditures. All right, so it is known as your capex. All right, so in the business world, no, it is also known as capex. All right, today what I will discuss is all about the capital budgeting evaluation process and explain what inputs are used in capital budgeting. Yes, and number two, later, no, I will discuss about the methods in terms of capital budgeting. Okay? Number one is what you called cash payback period. Alright. Number two here also, I will discuss later about the NPV or the net present value. So I will discuss about the NPV or the net present value. Number four, also challenges presented by intangible benefits in capital budgeting. All right. Number five is, of course, number three here is your profitability index. All right. So yan yung mga methods in terms of capital budgeting, and also indicate the performing the post audit. Of course, number four is all about internal rate of return. So I will discuss about IRR. And number eight is later I will also discuss about part of it is the annual rate of return. No, in other book it is known as the annual rate of return. Okay. All right. To summarize again, this is our topics that to be discussed again. So these are the methods, the cash payback period, and you have your net present value method. So I will discuss later about the present value, the equal cash flows, unequal cash flows, choosing the discount rate, simplifying the assumptions. Okay, I will discuss also some of the considerations. All right, and other capital techniques. So I will discuss about internal rate of return. I will discuss about discounted cash flows and also the annual rate of return. Again, in some book, it is called accounting rate of return. Alright, sige. So now, what do you mean of capital budgeting? Alright, in the first place, what do you mean of capital budgeting? Okay? So when you say about capital budgeting, okay, yes, it is basically you make capital expenditures decision. Yes, it is basically a making capital expenditures. All right, and also it involves among capital projects. Yes, and of course as part of the management accounting or financial management, 'di ba? Our goal here is to maximize the company's return. And of course, it is also part of our of financial management. Alam niyo ba guys, capital budgeting in our time, no. Although hindi pa naman ako matanda, no. I am only 36 years old, but in our time, uh, the capital budgeting is part of what? Capital budgeting is part of management advisory services. Until now, yes. Pero in the new syllabus, it is now part of financial management or financial investment. Why? Because of you maximize your return. At the same time, your goal is to recover. Your goal is to know your return, at the same time to compute for the net present value, because very important is to consider the time value of money. So later, we will discuss that one by one. Alright. Study objective number one. Discuss capital budgeting evaluation process and explain what inputs are used in your capital budgeting. Alright. So what are the evaluation process So very important here again is capital budgeting. The process includes what? Number one? Yan. So very important that in terms of capital budgeting, very important is you have a proposal. All right, common sense. If there's no proposal coming from the departments, plants, and authorized personnel, capex will not happen, right? So meaning there should be a project proposals. Number two, yes, very important also that the proposals are screened by capital budget committee. Take note of this one. It should be screened by a capital budget committee. Number three, very important also that in terms of capital budgeting, officers determine which projects are worthy of funding. Very important is, of course, common sense, no? If you have no money, di ba? Common sense na, if you have no money, capital budgeting will not happen. Because what is very important here is that you should have money and the officer should determine which projects are worthy of funding. And number four, the most important here is that the BOD approves the capital budgeting. Alright, what is the reason why that capital budgeting should be approved by the board of directors? Because take note of this one. Capital budgeting daw, sabi ni Roque, I remember. According to Roque, capital budgeting is basically what? Number one, it is para daw pag-aasawa yan, no? Meaning, you marry a man and a woman. Meaning, why? Because it is a long-term commitment. Yes. Alright, what else? Number two, capital budgeting daw is difficult to reverse. Diba? If you decide that one, diba? Irreversible, yan. Sorry, I cannot write this one. So, irreversible. Alright. Yan. And number three, in terms of capital budgeting, para daw pag-aasawa, magastos. Yes. Costly. Costly is the capital budgeting. That's why, board of directors, diba? Board of directors should approve the capital budgeting. That's the most important of all. Alright. That's why also, again, as discussed a while ago, capital budgeting should involves what? Cash flow numbers. Alright. Take note of this one. Cash flow information, Dapat ang capital budgeting, it involves cash flow numbers rather than accrual accounting. Yes, okay, today it is more on the cash flow numbers. We will not discuss or we will not have the accrual as discussed in your accounting. Why? For the purpose of this capital budgeting, estimated cash inflows and outflows are preferred for the meantime. Again, because, parang pag-aasawa, to marry a man and a woman, meaning capital budgeting involves long-term investment, long-term commitment. Number two, irreversible, diba? Irreversible to, ha? Alright, meaning irreversible if you have your decision. And number three is costly, meaning you should be able to know, your cash flow numbers for the meantime. Okay? Alright. So, what are the considerations in terms of capital budgeting? Yan. As discussed a while ago, very important is that capital budgeting is you have the availability of funds. Without your funding, for sure, you have the capital budgeting is impossible. Number two, relationships among the proposed project. Yes. And the company's basic decision approach. Very important also that in capital budgeting is to have the basic decision approach. And pinaka-importante, the most important of all is that in capital budgeting, take note of this one. Very important is the risk associated with a particular project. Very important is to consider risk. Why? Because of course, because of the risk of uncertainty, right? So like now, because of the pandemic, right? Yes, you purchase amount of money, you purchase sum of money to purchase equipment, but because of pandemic, you need to consider risk associated with a particular project. All right. So meaning, okay, for example, this is example, no? Stewart Company is considering an investment worth 130,000. The new equipment to last 10 years and have zero salvage value. What if you have an annual cash inflows of 200,000 and the annual outflows of 176? So you have 130, 10 years a salvage value, cash inflows of 200,000 and cash flows of operating, and you have 24. Take note, class, no? Take note, class. The reason why you will purchase investment worth $130,000 because you will have to generate dapat should be 24,000 cash flows. That's the most important of all, to generate cash inflow. If not, of course, common sense, you should not purchase equipment. All right. So we go again to our discussions. All right. So number 2. Okay. First is what you call cash payback period. Okay. What do you mean of cash payback period? All right. So when you say cash payback period, now it is identifies the time period required to recover. The keyword here is to recover your costs. To recover your costs of capital. Okay? From the annual cash inflow produced by the investment. So what is the formula to compute for the cash payback period? Take note of this one. Cost of capital divided by annual cash inflow. That is basically your cash payback period. Alright, again, the formula here is cost of investment divided by net annual cash flows. That's basically your cash payback period. Okay, take note of the formula. Okay? Alright. Again, the formula is cost of capital, no, divided by your net cash inflows to compute for our cash payback period. Again, when you say about cash payback period, no, it is the time period to recover the cost of capital. Alright, so meaning cost of investment, you divide it by your net annual cash flow. And you have now your cash payback period. So, yan ang ibig sabihin ng tinatawag na cash payback period. Alright, take note of this one. No? The shorter the payback period is, the more attractive is your investment. Alright, what do you mean of this one, sir? Meaning, you should consider or you should compare the cash payback period, no, to your useful life of the asset. Alright, meaning common sense, no? It should be the cash payback period should be less than your useful life in order for the investment to be more attractive, right? Because you can recover, no, you can recover the investment before the useful life, right? That's why very important is the shorter the payback period is, the more attractive is your investment. All right. We go to our example a while ago. Since what if you have $130,000 as your investment and you have also 24,000 as your cash inflows, meaning you have 5.42 years of your cash payback period. Alright, a while ago, I remember how much is our useful life? I think 10 years, right? Alright. If there is no conditions, okay, if there's no conditions, you will compare 5.42 and 10 years. What you will do, of course, to accept it. Why? Because 10 years, of course, the 5.42 is the cash payback period. It is less than 10 years. However, what if there is a conditions? Okay? Assume that Stewart's soap, a project, is unacceptable if the cash payback is longer than 60% of the asset's expected useful life. Alright, thus this project is acceptable. Meaning, because the 5.42 is only 50 something, 50% or 54.2%. So meaning, it is to be accepted because it is just over 50% but not over 60%. Alright, again, to accept your cash payback period, no, the cash payback period, CPP, should be less than what your estimated useful life of the asset to be acceptable. Alright. So what would be the advantages and or what would be the pros and cons of the cash payback period? Yes, the cash payback period, yes, it is part of the initial screening tool, yes. It is most critical in the capital budgeting, yes. And it is easy to compute at the same time to understand, yes. However, the cons of the cash payback period is that it ignores profitability. Why? Because you just compute for the years to recover your investment. And also it ignores the time value of money. Alright, that's the most important of all. Diba? It does not or it ignores the time value of money. Alright. So we are done in terms of the cash payback period. Number 2 is all about net present value method. Alright, what do you mean of net present value method, class? Okay. What do you mean of the net present value? So very important also to consider about the net or the explain about the net present value. Alright, when you say about net present value, right? So we will now discuss more about the time value of money. Alright, it is also known as discounted cash flow. Why discounted cash flow? Kasi the future value, no, will be converted into the present value. Magkaiba yan sa compounding, ha? The compounding is, by the way, a future value to present value. Compounding is future present value to future value. Alright, ito yung compounding. But ito naman is more on discounting, meaning you will compute for the present value of the future value. Alright, take note also of the capital budgeting. Ang sabi, recognized as the most informative and the best conceptual approaches to making capital investment decisions. Yes, recognized to be the most conceptual approaches in terms of capital budgeting decisions. Alright. Later, I will discuss about NPV and also about the internal rate of return. Alright. And also, you have here internal rate of return. Alright. So, I will discuss this later also. Okay, after our NPV. Alright. So, what do you mean of NPV? Alright. When you say about net present value, it is basically what? The present value of your cash flow minus our net investment. Yan ang ibig sabihin ng NPV. Meaning, the cash flow here is to be what? To be computed or to be yes, we compute this as the present value, to compute to their present value, because it is the future cash flow. Alright, so meaning the inflows, of course, discounted to their present value, and then you will compare this with our capital outlay. Alright, anong tawag doon? It is known as what? The net present value. It is also known as the net present value. Alright, and also, the interest rate to be used in discounting the future cash flows is also known as the required minimum rate of return, or it is also known as what? The cost of capital or WACC. Alright, what do you mean of WACC or the cost of capital? Cost of debt and cost of equity. Alright, so if we have time, we will discuss about it. Okay? The weighted average cost of capital or the minimum required rate of return or hurdle rate cutoff rate. Alright, so that's the meaning of the minimum required rate of return. By the way, to be accepted as part of the NPV, NPV should be 0 or it should be positive. Take note, ha? To be accepted as part of our NPV, it should be 0 or it should be positive. Alright, the proposal to be accepted in your capital budgeting or in your net present value. Alright, so the higher the NPV, of course, is the more attractive is your investment. Yes. The higher the NPV, common sense, of course, the more attractive is your investment. Alright, what to summarize everything, what would be the criteria? Present value of your cash flows less capital investment is equal to your net present value. With the net present value, if it is 0 or positive, again, you will accept the proposal. If it is negative naman, alright, you should reject the proposal. Okay, that's the criteria. Okay, take note, it should be 0 or positive. Alright, so we are now here, no? Okay. Okay, hopefully you know how to compute for the present value by using your calculator or using the table. Alright. For example, Stewart Company annual cash inflows is 24,000. If we assume this amount is uniform over the asset's useful life, the present value of its annual cash flows can be computed as shown below. Take note of this one. The 12% here is your cost of capital or minimum required rate of return. Take note of this 5.65022. Alright, be honest, no? Okay, where did 5.65022 or where do you find this amount? It is basically your discount factor for annuity. By using your calculator, you have here 1.12 divided by, right? Divided by equal sign, but it should be 10 times. So 10 times. Alright. Then, after that, minus 1 divided by 0.12. It is basically using calculator. Alright. But how about in terms of manual? Meaning, this is your rate, right? Alright. Present value here and the future value here. As you notice, right? Let's say first year, second year, third year, and fourth year. In terms of the present value here, what is the formula here, right? Of course, let's say this is your 1. Now, 1 is your investment. Of course, 1 plus R, right? That is basically your 1 plus rate, right? 1 plus R to, no, R. Alright. Meaning, 1 plus R. On the second year, 1 plus, multiply it by 1 plus R. What do you mean of R? R is your interest, no? Times to the 2. Right? That would be the amount, no? How about third year? 1 multiply by 1 plus R divided to the third. And also to the fourth then, no? Same as the future value. The future value is also 1. Okay, 1 plus R is fourth. What do you mean of this one? This is a compounding, meaning the present value to the future value. But in terms of discounting, pabaliktad tayo. Okay? So meaning, you have here future value and also you have here present value. Alright. Since it is to be multiplied, this is also to be divided by 1 plus R, okay, divided by 4. If you will use the calculator, you can compute this one. Let's say this is 0.12. This is 1.12. Yan. You can compute that 1.12 this one. See 1 plus R. So meaning 1.12 times 1.12 times 1.12. Okay, uh I will uh try, no? 1.12 times 1.12 times 1.12. Sorry. Of course this is 10 years, right? As long as this is the formula, right? And also about the third year, same. 1 divided by 1 plus R. Meaning, future value to the present value. Alright. 1R, this is to the raised to 3. Alright. Same also in 2 and also 1. Of course, yan. So, that's basically what? Compounding. Sorry, discounting. That's why here, you have 5.6502. Don't worry, later now, I will explain to you, okay? Alright. Let's say this is now your annuity of 1. So, 5.6502. Take note, class, when you have your annual inflows of 24,000, and this is a, what do you call that? Equal, meaning pare-parehas, 24,000. Just compute lang for the annuity. Later, no? Hopefully you will be able to learn, no? For this one. Meaning 24,000 times 5.65022, you have your 135,605. That's now your present value. Okay? That's now your present value. And also, you should compare that with your capital investment of 130,000. How much now would be your net present value? 5,605. Okay, accept or reject. Again, in the NPV, you will accept this one if you have positive or you have 0. So meaning, it is to be accepted. So later, no? Hopefully, you understand this, Alright, sige. Because after this, this is equal, meaning 24,000 for the next 10 years. Meaning equal. Okay. Next, how about in terms of unequal? Okay? How about in terms of unequal? Yan. What if you have an equal payment? Okay. Instead of equal payment of 24,000. A while ago, what we did is 1 year, 24,000 here, yearly, up to yearly, same, until 10 years. But now, what if it is now unequal? Instead of 24,000, 34, 30, 27, 25. Okay, take note of this one. What do you mean of this, sir? Alright. Go back to our discussion a while ago. Right? In terms of discounting, right? So meaning, in the first year, the formula here is 1 divided by 1 plus 12. Right? So meaning 1.12. 12 this one. Go to your calculator. So meaning 1 divided by 1.12. Tama ba? This is 0.89. Yes. Because ito yung rate natin, we need to multiply. Okay? So next one, on the second year, 1. Try nyo sa bahay, 1 plus 0.12. Pero this one, it is raised to the 2. Yan. So, this is half, 0.79. Or using your calculator. Diba? 1.12 divided by, alright, divided by equal sign. Alright, so, ito yung lalabas, 0.8. Until 10 years. Alright, sige nga. Okay, so, 1.12. So, 10 years. Hopefully, you can compute for this one. Or you can use the table. Alright. My next question here, this is the present value of 1. Next question here is, in your home, no? Please add this one. Add nyo nga to lahat. What is the answer? Sige, I will give you 2 minutes. 0.89 to 86 plus 0.79719 plus 0.71178 63552 56743 50663 0.5235 0.4388 0.36061 0.3219197. Very good. 5.65022. Sir, parang familiar. Yes, familiar siya. This is a while ago, right? 5.6522. Meaning, you can be able to compute for the present value of annuity by just adding the present value. Correct? Present value of 1. Correct? Correct ba, class? Correct ba, class? Yes. By adding all the present value of 1, you can be able to compute for the present value of annuity. That's why here, no, as discussed a while ago, mas okay if just add the 24,000 here, no? The 24,000 here, okay, by all the present value of 1. Meaning, okay, to analyze this one, what do you mean of this one? Meaning, yung piso mo pala, yung 1 peso, ang equivalent lang after a year is only 0.89, 0.719719, 0.71178, at 12% inflation or cost of equity. Your 1 peso, the equivalent of that is only 0.32197. That's the time value of money. Meaning your money, as time goes by, will decrease. Alright. That's the reason. That's the meaning. Alright. So after that, just multiply it by the present value by this one. Alright. So you have now here. So take note. You have 144,367. Again, you will compare that with what? With your capital investment. 144,367 minus 130, you have a net present value of 14,367. Again, it is to be acceptable because you have a 12%. You have a zero or positive net present value. So far ba naintindihan? Hopefully you understand, no? Alright. Choosing a discount rate. Alright. So again, discount rate, hurdle rate, cut-off rate, cost of capital is the same thing. Okay? Discount rate, hurdle rate, cut-off, required, cost of capital, same lang yan. Okay? Alright. Companies often assumes risk element is 0. Alright, take note of this one. If your interest will increase to 15%, common sense, and this is basically the cost of equity and cost of capital, as you notice. What happened to the NPV? It will become negative. Alright. Common sense lang naman yan because if you have higher interest, malamang hindi ka uutang. Correct? Meaning, it is not to be accepted or not acceptable because you have now negative. Mas okay if you have lower lower interest. Alright, that's the reason. Okay? So meaning, mas okay of the cost of capital is to have lower cost of capital rather than a higher cost of capital or to increase. Okay? Alright. To simplify these assumptions, for example, alright, to simplify this one, NPV, yes, all cash flows comes at the end of this year, yes. All cash flows are reinvested, yes. All cash flows can be predicted, yes. But take note of this one. NPV in real world is what? Based on the estimated amount, yes. Based on the estimated. Lahat yan ay estimated. Particularly with your cash flow. Diba? Hindi mo naman alam kung tama yung cash flow. Correct? Tama ba, class? No? Hindi mo alam because of the risk. Because of the risk involved. Hindi mo alam kung tama ang inyong investment. Alright. So, for example, okay, to summarize this one, no? Comprehensive example. What if you have investment of 1 million, cost of equipment of 200,000, salvage value of 20, 15%, 500, 230, and 40,000. Okay, we will compute for our NPV. Alright. So take note. Of course, you will compute first for our net present value, for the cash flows. All right. Take note now. Equipment purchase, of course, now present value na is 1, of course, today. That's why 1.0. So meaning you have 1 million. Okay? So 1 million is our cash flow. By the way, if negative, it is basically a outflow. Right? So negative is outflow. All right. And also you have your overhaul. Okay. Take note of this one. 5 years you will have an overhaul. Okay, go back to our previous, so meaning you have a 5 years overhaul, no? Salvage value of 10 years. All right. So meaning, because of this one, you have here the overhaul is 5 years, and take note, it should be computed on the present value. Present value after 5 years, which is at 0.49718. Yan. So, we need to compute for that, no? 0.49718. And after that, you have the net annual cash flows. Alright, so 230. So, meaning, you will compute for the present value of annuity. Okay? Just multiply, ha? Multiply lang to. And after that, salvage value. By the way, positive siya because it is a cash inflow na. And you have also salvage value. 20,000 times 10 years, you have 0.24719. Okay? And so overall, how much would be the net present value? 0.59825. Okay. So with this one, again, it is positive. So it is to be accepted. Okay? So that's basically what your net present value. So NPV here is to be accepted because you have what? Because you have a positive NPV. Alright. So far, any question? So, hopefully, madali lang sa inyo yung NPV. After that, we are now in Profitability Index. No question, ha? Alright. Next naman is all about Profitability Index. So, what do you mean of Profitability Index? Okay. You have a mutually exclusive property or investment. So, you have your Profitability Index. Take note of the formula. The formula is present value of the cash flows divided by investment. No? Same as our based on our NPV, di ba? Kaya lang pagkakaiba nila ay minus lang, no? Deduct. Ito ay to be divided by. Okay? And you have profitability index. What do you mean of profitability index? Alright. So what if you have project A and project B? Of course, with this one, okay, project A or project B using the NPV. Of course, you will choose project B because of NPV of positive 2574. Alright. Take note of this one. What is the formula for the PI? Present value of cash flow, diba? Divided by NI, net investment. Alright. What if ito yung ating problem? No? You can be able to compute already the PV. Diba? Why? Because given na is the net present value and given na the investment, just add na lang. Diba? So, meaning project A, so, meaning 58, 112, okay? You got it ba? You got it? Of course, sana makakuha nyo, ha? Divided by 40,000. That is basically what? NPV. How about on project B? O, just add na lang the 2. Diba kasi NPV to and initial investment, go back to our computations. Saan? Go back to our computations of our what? NPV. Ano yung formula ng NPV? Present value of the cash flows minus investment. So with this one, given the investment, given the net present value, you should go or compute backwards. Alright, so yan yung mga shortcut natin, ha? Why? Kasi later na I will explain to you ano yung mga long cut. Oh, ito na yung shortcut, no? Meaning ito ay 100. So how 90 plus 574, this is 110 574. You divide it by 90,000. Alright, saan galing to? Just adding 20 and 90. Alright, so later, ha? That's basically now your what? That's basically now your net present value. Okay? Okay. So, I will delete this one. Alright. As shown, both projects have positive NPV. So project B or NPV is higher, but that project also requires more than times or more than 2 times of the investment of project A. Kaya you will choose project B. However, in terms of profitability index, depende, no? Which of the following or which of the mutually exclusive projects should company accept? Alright. Yan. This is the long cut that I mentioned a while ago. No need to compute for this one, present value. Don't need na. Diba? Just have the NPV plus the investment. Alright. So a while ago, I gave to you the shortcut. In the board exam, very important is the shortcut. Okay. In the MBA, of course, yan. For me, the most important in the MBA is you analyze, right? So, as you notice, in the project A, so formula again, 58, as a while ago, no, we compute for this one. So, meaning project A is 1.45 and B is 1.23. So, a while ago, in terms of the NPV, you will choose project B. But in terms of profitability index, you will now choose A. Alright, so depende siya sa conditions. Okay? So, project A is more desirable because it has the higher profitability index. Alright. The question here in reality, of course, NPV is mas maganda. Okay? More conceptual approach in terms of profitability index. Okay? Alright. Any question so far? Alright. Any question so far? You can write naman or you can message me if you have question. Alright. Next is all about risk analysis. Alright. Or to be sensitive, no? Sensitivity analysis. One approach in terms of the risk analysis is that uses outcomes estimates, no, to get the sense of variability among potential. So NPV, of course, it is your risk analysis, no, risk involved, okay? To be sensitive in terms of numbers. Alright, so we are done in terms of payback period, net present value method. Number 3 is profitability index. Now, it is now your internal rate of return or the IRR. So some of the references, it is known as the internal rate of return. So, yan. So, what do you mean of internal rate of return? Alright, so what do you mean of the IRR? Okay? So, the IRR, basically, no, pag sinabing IRR, alright, so, when you say about IRR, it is results in finding the interest yield of the potential investment. Yes. Okay? When you say about IRR, interest rate that will cause the present value of the proposed investment to equal the present value of the expected annual cash flow. So, meaning, IRR here is the present value of the cash flow is equal to your NI. Or, NPV here is 0. Yes. That's the meaning of internal rate of return. Parang break-even, no, in our CVP analysis. Alright, what do you mean of this one? Okay, there are steps, no, to compute for the IRR. So, let's say you have initial cost of 249 and cash inflows of 45 and you have 8 years. Alright, step number 1 here is to compute for internal rate of return factor. Number 1 is to compute for internal rate of return factor. What is the formula? Capital investment divided by net annual cash inflows, and you have internal rate of return. Sir, parang may kaparehas yan na formula. Yes, the same formula in your very good cash payback period. In the IRR, it is your IRR factor. In the cash payback period, it is number of years. So, for example, if this is a cash payback period, the 5.533 here is your payback, meaning years. Alright. But in terms of our IRR, alright, it is not a payback. Alright. It is IRR factor. Okay, payback yan. It is not the payback. It is the IRR factor. Meaning, you will find the 5.533 in the 80 years. All right, meaning you will look for why 8 years? 'Di ba given yung 8 years kanina? The 5.533, you will go to what? You will go to your present value of annuity table. All right, and then look for the 5.533. Okay, and then go to number of 80 years and look for the 5.533. To be exact, of course, pinakamalapit ay 9%. So meaning, you will use the 9% as the discount factor as the cost of capital, no? In using the internal rate of return. If you have 9% here, for sure, NPV is what? 0. Your NPV is 0. Yan. Alright. So, what would be the decision rule here? No? You will compare the IRR with your cost of capital. Dapat the IRR should be more than with your cost of capital in order for for it not to be acceptable. Okay? Yan. Alright. Accept the project when the IRR is equal or greater than pala. Okay? Your required minimum rate of return. Okay? So, paano yan? So, yan. Assuming that the minimum, let's say you have the minimum required rate of return of 8% and you have 9%, of course, it is to be accepted because mas malaki ang IRR mo compare sa cost of capital or minimum required rate of return. Alright. Decision rule here, IRR to be compared with the minimum required rate of return equal or greater than, accept the proposal. If less than, reject the proposal. Okay? That would be the decision rule, no? Yan yung ating decision rule when you're talking about internal rate of return. Okay? Alright. To be accepted. Alright. So, in terms of the discounted cash flows method, in terms of the NPV, as discussed a while ago, NPV to be accepted if 0 or positive, IRR naman to be accepted if the IRR is greater than or equal to your minimum required rate of return. Okay? Hopefully, madali lang sa inyo, ha? Alright. So far, question. So, we are now on the last one, no? The annual rate of return or the accounting rate of return. No question, ha? Alright. Next is all about annual rate of return or your accounting rate of return. Some book, no, or reference, it is called accounting rate of return. So, what do you mean of annual rate of return? So, a while ago, 1, 2, 3, 4, cash payback, NPV, profitability index, and IRR, we use cash basis of accounting. But now, since it is annual or accounting rate of return, we will now use accrual accounting data, meaning your net income na. We will use accrual accounting data. And it indicates profitability of the capital expenditures. Yes. Alright. So, the formula here, take note, no? Net income, and we divide it by the average investment, and you have here your annual rate of return. Okay? Yan. Should be average, ha? Alright. So, take note of this one. It is now your annual income. What is the formula of the annual income? Sales minus cost of goods sold, gross profit minus expenses. You have now your net income. Diba? Ganyan yung formula natin. Alright. Okay, same as also in the IRR to be accepted, the accounting rate of return should be what? Greater than or equal to your cost of capital or to the minimum required rate of return, not to be accepted. Yan. To be acceptable, the annual rate of return should be greater than the required rate of greater than or equal to. Okay? Alright. For example, no, walang problema about computing for the net income since alam nyo na to, di ba? Let's say net income is 13. What is the formula again? sales minus cost of sales minus expenses and income taxes. You have your net income. Let's say you have 13,000 net income and you have 130,000 as the new investment. So you need to average this one, right? Alright. So paano yun? So 13,000. Okay. By the way, take note of the average investment. It should be investment original plus at the end divide 2. Okay? Alright. And also, investment at the end of the useful life is equal to the asset salvage value. Let's say you have no ending. So, beginning lang. Ay, sorry. Investment original. So, meaning, investment mo ay 65. You need to average siya, divide it by 2. Okay? So, Reno's annual rate of return is 20%. So, again, net income divided by your average investment. Alright, so, and then you compare that with the minimum required rate of return. For example, 20% is the accounting rate of return. Let's say, you have a 9% of, kanina, di ba? 9% is our minimum required rate of return, meaning it is to be accepted because ARR is greater than your cost of capital. Okay? So, what would be the advantages naman? Okay? Again, simplicity, simple to understand, simple to compute, profitability, yan. But, of course, again, it does not consider the time value of money as discussed in our payback period. And also, it relies more on the accrual number instead of actual cash flows. Bakit nga? Why? Because dapat cash flow muna tayo because it involves a large amount of money and large amount of investment saka irreversible siya in terms of decision making. That's why mas maganda if it is a cash flow numbers. Okay? I think this would be the end of this slide, no? So you can have this one. So I will give you the answer na lang, no? All right. Yeah, this would be the references, no? So I use the book of Weigand and Kesso. Okay? Again, thank you very much and hope to see you soon. Bye-bye.